Something is happening in Las Vegas right now that most people haven't noticed yet, but the insiders are already panicking. Condo listings are exploding, buyers have disappeared, and owners are quietly trying to escape before the situation gets worse. The real estate community keeps calling it a slowdown, but the data and the whispers coming from inside the buildings tell a different story. If you own or plan to buy a condo in Las Vegas, you need to hear what's really happening because this market is unraveling much faster than anyone is admitting. Across Las Vegas, the number of condos sitting unsold has surged to levels that would have been unthinkable just a year ago. More than 2,300 units are currently on the market with no buyers in sight. And that number keeps rising week after week. What's even more alarming is how fast this shift hit the city. 12 months ago, the condo market looked heated, competitive, and unstoppable. Now, entire buildings have floors of dark, empty units where buyers used to line up. Properties that used to sell in a weekend are now sitting untouched for 2, 3, even 4 months. Open houses that once drew crowds now get zero foot traffic. In some neighborhoods, real estate agents are openly admitting that they've stopped scheduling weekend showings because nobody shows up anymore. On paper, the market is supposed to be cooling gently, but on the ground, it feels more like the brakes locked up and the engine died. Several agents have quietly said they haven't seen inventory pile up this quickly since before the last Las Vegas condo crash. Back then, the surge in listings was the earliest warning sign the entire valley ignored. Today, those warning signs are flashing again, and this time they're flashing at double speed. Official reports paint a calm picture suggesting the median condo price in Las Vegas is holding steady. But anyone who actually tracks listings, talks to sellers, or monitors price cuts knows the truth is very different. The real prices, the ones owners are actually accepting, are sliding downward quietly and in some cases aggressively. Behind the scenes, sellers are chopping tens of thousands off their asking prices just to get attention. Price cuts of $10,000 aren't even considered news anymore. Cuts of $20,000 to $50,000 are becoming common, especially in older buildings or high-rises with rising fees. And even after slashing prices, many listings still sit without a single offer. That's how weak buyer demand has become. In certain distressed properties, things get even worse. Some units in older towers are being whispered about in private investor groups. Units rumored to be offered for as low as $40,000 or $50,000. There are even stories of desperate owners trying to unload condos in the low $30,000 range just to escape mounting homeowner association debt. These cases aren't verified publicly, but the fact that such extreme stories are circulating at all signals how much fear has already seeped into the market. The median price graphs and official charts don't show this collapse because the most desperate sales often never hit the main listings. They happen quietly, off-market, between panicked owners and opportunistic buyers who sense the downturn that's unfolding. When the real prices fall, long before anyone updates the official median, you know the market is in trouble. And right now, Las Vegas condos are showing all the classic signs of prices cracking long before the headlines catch up. HOA fees have become one of the most destructive forces in the Las Vegas condo market, and they are rising so quickly that many owners can no longer keep up. Across the major high-rise towers on and near the Strip, monthly fees commonly range from around $800 to as high as $1,600. And in some luxury towers, owners report creeping figures above $1,800 or even $2,000 depending on unit size. When you add these numbers up, many condo owners are paying between $10,000 and nearly $20,000 per year just in association fees alone. These costs come before paying a mortgage, taxes, insurance, repairs, or anything else. For many investors, their entire rental income is being swallowed before they even start calculating their real expenses. What makes the situation worse is the speed at which these fees are rising. Some buildings have increased their monthly charges by more than 20% in just 1 year, and several owners have reported that their cumulative increase over the last 2 or 3 years is closer to 30%. These sharp jumps are often blamed on inflation, rising labor costs, insurance hikes, and the simple reality that many buildings constructed during the early 2000s boom are now aging into the period where their largest systems need expensive upgrades. The COVID years also delayed essential maintenance, creating a backlog of repairs that are now arriving all at once with far higher price tags. But the most painful part for owners is not the monthly fee, it's the special assessments. These surprise charges land on owners without warning, and they can be devastating. Across the city, owners have reported assessments in the thousands, often related to elevator repairs, roof replacements, water intrusion, plumbing failures, and structural deterioration. Some assessments reach $5,000 or $8,000, while others exceed $10,000 or more. There are stories circulating about certain older towers pushing assessments well above that range, placing heavy pressure on owners who were already barely keeping up with their regular fees. In some cases, owners have received multiple assessments in the span of a single year, resulting in sudden bills totaling tens of thousands of dollars. One former owner described how their building issued 3 separate assessments within 14 months, and the combined cost was so overwhelming that they had no choice but to sell their unit at a steep loss. They said the financial pressure was so intense that continuing to own the condo made no sense, even though they had already paid off their mortgage. Situations like this are becoming increasingly common as buildings discover long-delayed structural problems or receive updated inspection requirements that reveal hidden issues. The most alarming part of all this is the legal power HOAs hold in Nevada. Under state law, an HOA can place a lien on a unit after just a few missed payments. If those fees or assessments remain unpaid, the HOA can move forward with foreclosure, even if the owner is completely current on their mortgage. That means a person could owe $300,000 or $400,000 on a property, be fully up to date on every mortgage payment, and still lose the entire condo over a few $1,000s in unpaid HOA charges. This legal structure gives HOAs an enormous amount of leverage, and when fees are rising this fast, it creates a dangerous situation for owners who are even slightly financially stretched. As a result, many investors and longtime residents are quietly growing fearful. People who bought multiple units during the post-pandemic boom are suddenly watching their carrying costs skyrocket. First-time buyers who stretch their budgets are seeing monthly fees climb far beyond what they expected. Older buildings are dealing with expensive repairs that cannot be postponed any longer. And rumors are circulating that at least 2 major high-rise towers near the Strip may implement emergency fee increases to cover serious maintenance issues. If that happens, a wave of owners could fall behind almost immediately. The HOA crisis is not just another inconvenience for condo owners. It is the pressure point that is accelerating the entire collapse of the Vegas condo market. When fees rise this fast, when assessments hit without warning, and when foreclosure laws favor the association over the homeowner, the market becomes fragile, and right now, that fragility is starting to show in every corner of the valley. One of the most worrying signs in Las Vegas right now is the quiet rise of foreclosures connected to HOA debt. Unlike a typical housing crash where people fall behind on their mortgages first, this situation is different. Many owners are staying current on their loans but falling behind on their HOA fees, and in Nevada, that's a serious problem. The moment an owner misses a few payments, the HOA can place a lien on the unit and begin the foreclosure process, even if the mortgage is fully paid on time. This gives the HOA incredible power, and it's catching a lot of owners off guard. Several foreclosure professionals in the Valley have mentioned seeing more cases involving unpaid HOA fees, especially in buildings where monthly costs and special assessments have jumped sharply. It hasn't hit official public numbers yet, but the early signs are there. Owners who were already stretched before the fee increases are now slipping behind. And once that happens, the clock starts ticking fast. HOA foreclosures move quickly, and many owners don't realize how little time they have to stop the process. The situation becomes even worse in buildings that have issued back-to-back special assessments. Some owners have been hit with sudden charges of several $1,000s, and when they can't pay, the delinquency builds rapidly. A few missed payments can push an owner into a danger zone where recovery becomes difficult. These smaller-scale defaults rarely show up in news headlines, but they create the first cracks that eventually spread across the entire market. Investors holding multiple units are especially at risk. When one unit falls behind, the pressure from rising fees makes it harder to keep the others afloat. This is how small financial problems snowball into larger ones. And with more owners starting to fall behind quietly, the signs of a deeper problem are beginning to appear. It's a slow, silent buildup, exactly how the last major condo crash started. Another major blow to the Las Vegas condo market is coming from the rental side, where things have shifted from strong demand to sudden oversupply. For years, investors relied on renting out their condos to tourists, traveling workers, and short-term guests. But now, vacancy rates across the valley have climbed close to 10%, and even buildings near the Strip are seeing vacancies around 7 to 8%. Units that once rented instantly are sitting empty for weeks or even months, leaving owners with no income to cover rising HOA costs. At the same time, rents themselves have been slipping for several months in a row. Many owners are being forced to lower their prices, offer free weeks of rent, or include utilities just to attract tenants. Some are even paying extra bonuses to agents to help fill units. something that was almost unheard of just a couple of years ago. The surge of new apartment complexes in Las Vegas has made things even harder. Around 12,000 new units have opened in the last 2 years, offering modern amenities and incentives that condo owners simply can't match. This wave of new apartments has changed the entire landscape. Renters now have more options, better deals, and far less reason to choose a condo with higher fees and older systems. Investors who bought multiple units expecting strong rental income are now stuck with properties that aren't generating enough money to cover their expenses. Every month their units sit empty, they lose more, and that pressure builds quickly. The rental safety net that investors counted on is unraveling, adding one more layer of stress to a market that's already showing serious cracks. As vacancies rise and rents fall, the financial strain on condo owners keeps growing. And when rental income disappears, owners have no cushion left to absorb rising HOA fees, assessments, and maintenance costs. This is how markets shift from soft to unstable, and Las Vegas is already deep into that transition. The pullback from developers marks the final and most telling sign of where the Las Vegas condo market is heading. When builders with decades of experience and millions of dollars at stake decide to step away, it usually means they see risks that the public hasn't recognized yet. And in Las Vegas, those risks are now stacking up fast. Rising inventory, falling demand, weakening rental income, higher vacancies, increasing HOA costs, and owners quietly slipping behind on payments. All of these pressures are landing at the same time, forming a market that is far more fragile than most people realize. Whether you own a condo, plan to buy one, or are simply watching from the outside, it's important to understand how quickly conditions are changing. What started as a slowdown has escalated into something much deeper, and the warning signs are becoming impossible to ignore. The combination of rising costs and shrinking demand is the exact pattern that has led to major corrections in the past. And this time, the market is showing those signals even faster than before. For anyone involved in Las Vegas real estate, staying informed is no longer optional. The next few months will determine how severe this downturn becomes and how long it lasts. And right now, every piece of evidence points to a market that is moving in the wrong direction far more quickly than people expected. The hope is that things stabilize, but the reality is that Las Vegas is once again entering a phase where the smartest move might be caution, awareness, and readiness for whatever comes next.